All right, good morning, ladies and gents. Now, we've talked about with stocks that you have to take a long-term perspective on things. If you try to just deal with the day-to-day fluctuations within a stock, you'll make yourself crazy. You'll be buying and selling all the time, and more than likely losing money, not making a profit. So, just for an example, this is Apple, right? This is today. Today is a down day. Yesterday was a down day as well, right? So let's go out 5 days. So let's say you bought the stock 5 days ago. You would have bought it at 304. So it's just slightly below its price 5 days ago. If I go out a month, we're at 128.6. So if you bought this stock a month ago, even though we've had pretty serious downturn right here, you still are profitable. If you go out 6 months, right? Was that 1 month? 6 months. So it drops down to about 265. Not a big difference between 1 month and 6 months. But then if we go out a year, if you bought the stock a year ago, you bought it at 189. So you've always got to take the long-term perspective on this, right? If you freak out and you panic and you sell right here, you lost a lot of money or opportunity cost, right? Let me back up a little bit here. I've also talked about volume, right? That's these bars down here. You can see it was pretty steady. We had a little bit of a crazy day here, but for the most part, it's been steady. Then all of a sudden, the coronavirus hit and the volume just went nuts, right? So a lot of people trading shares, a lot of people getting out of that. But I just want you to see, let's go 5 year, right? You could have bought Apple 5 years ago for $125 a share. That's more than doubling your money in 5 years, which means you're getting more than a 20% return on your money in 5 years. 20% per year. So I'll take that any day. Shit, I'd take 10%. So, stock market, you got to take more of a long-term view. When it comes to your retirement account, the worst thing you could do is look at that thing every day. You want to check in on it, maybe once a month, kind of see where things are at, annually, review your funds to make sure that they're doing what you want them to do and make any changes. You might want to sell one fund and get into another fund, an emerging market or some other sector that looks hot. All right. So we are going to continue on today with our investing. This is actually our last assignment inside of investing. Next, we're going to be looking at budgeting. And this actually leads you straight into budgeting. So I think it's a good fit. So in this particular one, you're going to be signing up for your first 401k. 401k is a retirement account. Now, the benefit of the 401k is that a lot of employers will match what you put into your 401k. So basically, it's free money given to you by your company. You want to take advantage of that. You want to put in the max, whatever they're going to match. You want to put in the max. So if they're going to match, this says up to 6% of their salary. So let's say they made $100,000 a year. They would be able to invest or put $6,000 a year into their 401k, and their employer is going to give them 50 cents for every dollar they put in. So the employer is going to give them $3,000. So you end up with $9,000. You put in 6, employer puts in 3, you end up with 9 to invest. So let me just tell you, you want to max this out every time. Get that free money. After that 6% max, then you might want to back off or even stop. But you want to get every penny that your employer will give you. So first, they're going to talk about, have you think about your vision of retirement. How much money do you think you're going to need? And what does your ideal retirement look like? Then we're going to look and say, you got your first job, average salary 50 grand. That makes sense for someone coming out of college. Oh, but then they take out taxes and you only take home $3,100 per month. Then you've got all these different scenarios. So you got to kind of figure out, how are you going to make all of this work? In part 3, asset allocation. So you've got different risk versus the rewards. And you are going to do some calculations to see what you're going to end up with at the end. This is going to show you the returns that certain things got. This is my favorite, you guys, S&P 500 index fund. I love the S&P 500. And then here's some bond funds. Target date funds, which again, I don't know a whole lot about, but it does sound very promising. And then you're going to answer a few questions based off of this. This is going to take you guys a little bit longer. So I'm giving you today and tomorrow, Thursday and Friday, to finish this assignment. So next week, we're going to continue looking at our portfolios. Shoot, let's do that real quick. Quick check-in to see where everybody's at. A bunch of you guys still aren't investing. I gotta say, it's a little frustrating. I put a lot of work into this stuff, but oh well. Thank you to those of you that are actively participating. I appreciate that. And as it stands, it looks like Purple Kevin is still in the lead. And he's ranked 17th. That's our best ranking. And I'm 26th. So you are doing better than I am. And then we keep going all the way down till we get into some of those flat negative. Anyway, all right, ladies and gents, where did it go? Time for you got your first job. Time for you to sign up for your 401k. All right, good luck, ladies and gents.